Hi, I'm Shaun Murison, market analyst at IG South Africa. We're going to take a quick look at the South Africa 40 index and just see where we are currently in the market. Our first chart is a line graph dating back from the March lows in 2009. This is a daily chart extending to where we are right now. As you can see, long-term trend is currently in play. The short-term correction that we've had in the market has brought us back down to this trend line support. Same chart, but we've added a 200-day moving average just as a gauge of long-term trend. We see that the market traded slightly below, now has once again reared its head above that 200-day moving average, just supporting that long-term trend, having a bias to the upside. Here we have a 20-day moving average on our South Africa 40 index, just as I use that as a gauge of short-term trend. And as you can see, after that recent decline, we're now trading on the other side. When you see a moving average slicing through the price here, that generally gives us an indication of a consolidation. But here we've had a downtrend, and now we're starting to trade on the right side of that. Another indication telling us the same thing, just a simple trend line on our line graph, showing that we've now broken to the other side of that trend line. That trend line break that we just saw coincides with this consolidation break. This is a consolidation because over this period here we failed to make higher highs or lower lows, and as we broke through, now we've started making higher highs. The range of that consolidation was 33,100 to 34,000. With consolidations, generally what we do is we measure the size of that consolidation and we project that height to give ourselves a potential target when we have a directional move, which looks like we're having a directional move at this point in time. Coincidentally, that 900 points takes us back to historical support, which is anticipated as near-term resistance. So at the moment, what we have is we've got a long-term uptrend. We've had a correction of that uptrend. The short-term trend is now in sync with that longer-term uptrend. It's broken out to the upside and favoring a bullish move towards that 34,900. Further 300 to 400 points from where we are at the time of recording this presentation. Further targets on the upside. Should we manage to break through that 34,900, 35,530 seems to be a level. It's acted as support a number of times as well as resistance. But we need to make it through this 34,900 before we can consider our next targets. Firstly, just want to reiterate that the short-term and long-term indications are for a move up. But should we start to retrace and start testing these lows here, the recent low at 33,100, then we can consider the continuation of that downward trend that we've seen recently. Just to put in perspective the potential for further downside should this bullish move fail, we're looking back historically. This is a weekly graph from those 2009 lows, and as you can see, we've had three major corrections. The first was 10% over a period of 4 weeks, 12.5% over a period of 12 weeks, and 15% over a period of 25 weeks. If we project that from the recent high, we can see that it takes us to a level of about 32,900, which means that we've almost had a 10% correction in our market already. That recent closing low that we looked at was 33,100, and so it's just a further 200 points below that. Looking at that hindsight, and if past has any merit in predicting the future, a further 5% from those all-time highs could be possible, and that would take us back down to the 31,000 level.